Dear students, we'll solve one more problem on the topic final accounts of non-trading concerns. This is video number 19 and I'm Dr. Panduranga Nayak, Principal, Swiss College, Bentwal. Look at the problem here. Receipts and payments accounts are given as on 31st/12/2018. Further, additional information also is given. There are two amount columns. First one is on 1/1/2018. In other words, it is as good as 31st/12/2017. And the next one is 31st/12/2018. Current year balance at the end. Okay, we'll take up the items one by one. Subscriptions due to 240. See, this is due at the end of the previous year. So here you have got subscriptions 47,996. These amount include 240 received during the year, but for last year. Therefore, these 240 rupees are to be deducted from 47,996. And then 280 outstanding at the end of the year should be added because it is the current year outstanding value. So since it is not included, it should be added. Okay, 240 subscriptions due at the end of the previous year will come to the opening balance sheet. Here, capital fund is not given. Therefore, you need to calculate capital fund. For that, you have to open balance sheet at the beginning of the year. 280, this will be added to subscriptions in the income and expenditure account. Further, this will come to the closing balance sheet asset side. Subscription received in advance. So 64 are received last year, whereas that is the income of current year. Therefore, 64 rupees are to be added to subscriptions in the income and expenditure account. And this will appear on the liability side of the opening balance sheet. And subscription received in advance during the current year, that is relating to next year. Since it is for next year, that should be deducted from subscriptions of the current year. Then it should be shown as a liability on the liability side of the closing balance sheet. 64, this should be added to income and expenditure account subscriptions because though it is received last year, that is the current year income. 64 rupees are to be added, whereas 100 rupees are to be deducted because that is related to next year. And next thing is, okay, that's about subscriptions. Let me repeat, 240 should be deducted from current year subscription because you have received this year, but it's relating to next year, last year. 280, that's relating to current year, you have not received it, so it should be added. And this will come to the closing balance sheet asset side. This will come to the opening balance sheet asset side. Subscription received in advance, this will come to the opening balance sheet liability side. 100 rupees will come to closing balance sheet liability side. 64 rupees received last year relating to current year, so it should be added to subscriptions during the current year. And then 100 rupees relating to next year, you received this year, that is not the income of current year, therefore that should be deducted. Okay, come to stock of medicines. So stock of medicines at the beginning of the year, okay, 8,810. Find out whether there are any additions to the purchase of medicines. So medicines purchased 30,550. So this should be added to 8,810. Then the creditors for medicines, that is nothing but outstanding creditors for medicines last year. So that should be deducted from this value. So from the medicines you have to deduct paid for last year. that is 10,000. And then yes, you have to deduct 31,600 balance at the end of the year. Whereas 8,000 creditors for medicine, outstanding creditors for medicines, this has to be added to 8,810. Let me sum up. Here what you have to do is, in the income and expenditure account, you have to find out what is the medicines consumed during the year. For that, opening balance 8,810, this should be taken. Add additions during the year, this one 30,590, that should be taken. Then see, creditors for medicines outstanding for the current year, this should be added. Therefrom, you have to deduct 9,740, that is closing balance. Then also you have to deduct 10,000, that is outstanding creditors for medicines of last year you have paid during the year. So ultimately you are going to get medicines consumed during the year. Okay, next one, estimated value of equipment. 21,200 is the opening balance, and addition is 15,000. From the total you have to deduct closing value of equipment. Then you will get depreciation. Depreciation has to be debited to income and expenditure account. And 21,200 will appear in the opening balance sheet. 31,600 will appear in the closing balance sheet, both asset side. Okay. Similarly, 8,810 will come in the opening balance sheet, asset side. 9,740 will appear in the closing balance sheet. And then next, buildings 40,000, this will come in the opening balance sheet. 38,000 will come in the closing balance sheet. And there is a depreciation of 2,000. At the beginning it was 40,000, now it is 38,000. So depreciation during the year on building is 2,000. Creditors for medicines, I already told you, this will come to the opening balance sheet, liability side, and 8,000 will come to the closing balance sheet, liability side. Come to the receipt side here. Cash in hand, this will find its place in the opening balance sheet asset side, whereas cash in hand at the end will come to the closing balance sheet asset side. Subscriptions, I already told you, to this you have to make certain adjustments. Donations, we assume that it is capital receipt, so it will be added to capital fund in the closing balance sheet. Interest on investment at 7% for full year, 7,000. So for the full year you will get 7,000, but what is the principal amount? What is the value of investment? So 7,000 divided by 7 into 100. So 7 is equal to 7,000. What is 100? That way you have to calculate the principal value of investment or value of investment. I repeat, 7 is equal to 7,000. What is 100? So what you have to do is 7,000 divided by 7 into 100. That way you have to calculate. So this was there at the beginning of the year. That means in the opening balance sheet also you have to get the value, that is 1 lakh value of investment. Proceeds from charity show 10,450. This will come to the income and expenditure account receipt side, and here expenses on charity show, it will appear in the payment side, or else you can show it in the receipt side only, income side only. 10,450 minus 750, the remaining value you can put. That's nothing but surplus from charity show. That way you can write. This is another way of treating the items. Come to medicines, I already told you regarding medicines, opening balance, add additions, add outstanding value at the end of the year, minus creditors for medicines at the end of the previous year, then closing stock. So you get medicines consumed during the year. Doctor's honorarium to be debited, salaries, petty expenses, these are to be debited to income and expenditure account. Equipment, so opening balance, add additions, this one minus closing value, you will get depreciation. That will be shown in the income and expenditure account, and in the balance sheet, equipment, opening balance, add additions, minus closing stock, minus depreciation, you will get the closing balance. Expense on charity show, I told you already, it should be debited. Alternatively, from the proceeds only you have to deduct and net value of the show in the income side. Cash in hand will appear in the closing balance sheet. All these items are explained. Again, let us quickly run through the calculations. So we are preparing opening balance sheet because I already told you in the problem capital fund is not given, but information is available in order to calculate the opening capital fund balance. See what items will appear in the opening balance sheet. Outstanding subscription at the beginning of the year. That is relating to last year. Last year it was outstanding. This year you have paid. Therefore, here you are deducting that 240 from subscriptions, and that will appear here 240. Cash in hand, opening balance. Stock of medicines at the beginning. Investments were there at the beginning, that's why you got full year interest. So the face value of investment is 1 lakh. Equipment at the beginning 21,200. Buildings at the beginning 40,000. Subscription received in advance beginning or last year 64. Creditors for medicines, that's outstanding creditors for medicines 10,000. So balancing value is 1,61,360 is the capital fund. Come to the income and expenditure account. Subscriptions 47,996. This includes paid for last year 240 deducted, current year outstanding 280 added, and last year you have received subscription in advance. Though you have received last year, it is the income of current year, that's why it is added. And similarly, you have received subscription in advance. It should be 2019. It should be for the year 2019. You have received during 2018, but for 2019 received in advance. That is why it should be deducted. And interest on investment already it is given here 7,000. See here it is 7,000. So that should be taken here. Then proceeds from charity show. So credit side. Come to the debit side. Medicines consumed during the year. Opening balance is 8,810. Medicines purchased during the year 30,590. So total is 39,400. Creditors for medicines this year. At the end of the year, creditors for medicine 8,000. That means you have purchased, but you are not paid for that. These are nothing but credit purchases. 47,400. Therefore, you have deduct last year there were outstanding value for medicines purchased. This year you have paid for that. Therefore, though you have paid during the year, that is not meant for current year. That is not the expense of this year. That's why it is deducted. So, medicines purchased 30,900, 590. So total, then creditors for medicines this year minus creditors for medicines last year. Then stock of medicines at the end of the year. So what you get is 27,660. Doctors honorarium 9,000. And salaries, petty expenses, expenses on charity show, these all will be debited. Depreciation on equipment, opening balance, add additions or purchases minus closing stock, we get the depreciation. Depreciation on building 40,000 minus 38,000, 2,000. So if you compare both the sides, the expenditure side is more than in this income side. Therefore, there is deficit. In other words, excess of expenditure or income. So the value is 6,521. Come to the closing balance sheet. Outstanding subscriptions at the end of the year 280. Cash in hand at the end of the year. Stock of medicines at the end of the year. Investment 1 lakh. There is no change. Whatever was there at the beginning, that is there at the end also. Equipment at the beginning of the year 21,200. Purchases during the year 15,000. From the total, deduct depreciation 4,600, which you find here. See 4,600. So you will get 31,600. Building 40,000 minus depreciation 2,000. 38,000 is the value at the end of the year. If you look at the liability side, subscription received in advance for 2019. So it is 100. Creditors for medicine at the end of the year 8,000. This is not paid, therefore it is a liability. Capital fund opening balance is 1,61,316, which you have found out by preparing opening balance sheet. Donations you have added 14,500. Here we have capitalized that. So you have written a note here. Donations are capitalized as the amount involved is big. Then if there is surplus during the current year, that should have been added, but here there is a deficit or shortage. Expenditure is more than income. Therefore, we have deducted that. As a result, 1,79,295. So, the total of both the sides 1,83,395. Thank you very much.